Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with the Finance Ministry's latest Green Book report on the economy, which says that the resurgence of the coronavirus in Korea presents uncertainties, or could present uncertainties, for the economy. And that's something that hasn't been in the report since March. Tell us a bit more about the government's outlook.
Yes, as you know, the South Korean economy is on the right track of recovery, but continuously this flare-up of the COVID-19 cases might have some negative implication for the domestic demand. Uncertainty clearly happens as the social distancing has strengthened and that the economic activity in terms of domestic consumption could weaken in the future. If you look at the amount of the new additional patients, every day it's over 1,000 cases plus, and that's been happening for more than 7-8 days now. And clearly the numbers were rising in a trend, and it did hit about 1,600 plus in a few days ago. But it seems to be now stabilizing, but nevertheless, it is a very strong number. The ministry have said that the export remains robust continuously, but there is an uncertainty regarding the domestic consumption. So far now, domestic demand shows signs of improvement while the job market is recovering from the slump. But with this uncertainty of the COVID-19 cases, the uncertainty about the domestic demand could heighten, as that's what Ministry of Economy and Finance said in its Green Book. Now, in looking at the private consumption area, if you look at the domestic debt level, the retail debt as a percent of GDP is quite high. So therefore, unless the economy is improving, there's a difficulty of boosting the domestic consumption through the additional boosting measures for now. So therefore, we need the activity to improve as the global economy improves and the resurgency dies down. Without that, we think that there's clearly some signals and possibility that domestic demand might be weaker than expected going forward.
Well, now turning to the markets, stocks on Wall Street overnight were down for the most part, with Jerome Powell saying he does see an elevated level of inflation, though he still expects it to come back down. And investors also seem to brush off some better than expected earnings. What's the story today in the global markets?
Right. We needed to see some of the inflation number to stabilize right before these earnings releases. We already knew that the earnings numbers were going to be very strong for the second quarter as the economy heating up or, say, recovering very fast. So most of these earnings releases numbers will be very positive. At that same time, we needed some kind of cooling numbers regarding to the inflations, but we didn't get that. And there's mixed signals in terms of what kind of the inflation will be coming through in the future. If you look at the number, it showed over 5.4% year-on-year growth rate. Yes, it is from the very low base. But nevertheless, if you look at on a month-to-month basis, it is showing a 0.9% growth, which you analyze that number, that's over 10% growth for the year. So clearly there is a signals of the inflation. Of course, though, there's the inflation numbers are related to the used car sales price and some other so-called COVID-19 impact that is affecting the inflations, and that's what the White House is saying, that the actual inflation without these unreasonable these numbers, if you look at just the core inflation numbers, it is already down to 0.22%. That's what the White House is saying. So if that's the case, then inflation number is around about 2 to 3% on average. So with this, we we see the bond rate stabilizing and the market is actually stable. We don't see the market crashing down because of the inflation, worrying about the tapering and an interest rate hike. But nevertheless, it's lacking some certainties in regards to inflation for the market to further rise strongly. So for the time being, we might need some time for the market to rise in the future. We probably need to see the July number of inflation before the market to do the summer rally that it's expected.
Right, we'll keep an eye on that, of course, on this program. And today here in Korea, the Kospi closed lower as retail investors continued to buy, but foreigners and institutions were selling. Some biopharmaceutical names like Seegin were off today, but a higher close for Kakao Games. Tell us about the domestic market.
Yes, the domestic market continues to be showing some corrections after a sharp fall last week by about 3.8%. And on Monday and Tuesday did recover nicely, but towards the end of this week, as with these inflation numbers of U.S. comes through, people are uncertain. Also, with this COVID-19 cases heating up, uncertainty regarding the domestic consumption recovery is there, and therefore we are seeing some weakness of the Kospi and Kosdaq. Today, Kospi closed down by 0.28%, and Kosdaq was down by 0.22%. And also, BOK is talking about benchmark policy rate unchanged for the time being, but they're saying that they will probably conduct some interest rate hike before the end of the year. But as you know, as we said, this COVID-19 cases might have some implication for Korea. So therefore, we might not see actual rate hike, but nevertheless, the BOK have hinted at that possibilities. All in all, Korea is much more skewed towards the export, and these export numbers are robust despite all this uncertainty about COVID-19 new cases. So therefore, we think that the fundamentals and valuations for Korean equity market remains to be very strong. If you look at dividend yield for Korea and Kospi, you're looking at 4% for this year and continuously for 4% for next year as well. If that's the case, the current government bond rate of 2%, that makes it the Korean equity market very attractive. So for the time being, there are uncertainties, but if you go towards the end of the year, as dividend yield looks attractive, we think the Korean market has more room to rise in the future.
And finally, Mr. Yu, if we could talk about the exchange rate. The won has come back down from 11.50 to the dollar, where it was on Wednesday, Thursday, now to about 11.40. What was behind that move, and where do you see it going?
As I said, the Korean won has probably some possibility that it might rise to 11.50 level, but it might be difficult to further rise in the future because if you look at the domestic economy, it is very strong relative to any other countries. And the overall government debt as a percentage of GDP is also low relative to any other countries. Only uncertainty is the consumer debt. That is quite uncertain as the total percentage is about 100% plus of the GDP. But in any case, there's a possibility that the renminbi, Chinese yuan might have implication for the Korean won. Despite the reserve ratio cut by Chinese Bank of China, PBOC, we did not see the Chinese yuan depreciating aggressively. If that happened, then Korean won should have further depreciated. But it seems that the Chinese yuan is stabilizing. With that, we think that the global economy is reasonably good. With the boosting measure coming through from China, as well as U.S. picking up, we think that Korean export remains to be very strong. If that's the case, the currency is not going to be further depreciate from the 11.50 level. Right now, it has retreated back down to 11.40 territories. We think that Korean won should be range bound anywhere between 1100 to 1150 over the next several months.
All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for your insights. We always appreciate it, and have a great weekend.
Thank you. You too.